All right, well, welcome everybody to the Sunday Night Talk with Dr. D, I guess. We've been putting on these shows now for a little bit, and I wanted to have a surprise for everyone that came on tonight. And one of the surprises that if you look in the chat link, you'll have a copy in the very first link up top, which is right here. It says sales funnel, RTP-BizDev.com. Everyone who comes on the show tonight will get a link to my book for free. So once you click on the sales funnel.
You said there's a link in the chat?
Yep.
I don't see it.
It's right here. It says me to everybody. It's go up. It's at 6:50. I copied it there earlier.
Oh, I guess I joined at 7. I guess I don't have access to it.
Ah, okay. Well,
I don't have it either, Devon.
Okay, let me resend it there.
There it is.
Okay, good. So it's a link to a book that I wrote maybe a couple of years ago. But I thought it would be interesting to talk a little about it tonight for some of the concepts that we're trying to drive home with investing and portfolio and everything else like that. But let me see if I can go to the link itself and show you what it looks like. So when you click on the link, this should be the first thing you see. RTP Business Development, from debt to financial freedom, how to start on a path of financial freedom in this free ebook. So once you, I guess, click on here to get your own copy for a PDF ebook for free, it'll take you to a link. This is what the cover of the book looks like. And then you can enter in your name and your email down below. And then once you, there you go. Once you get down to the bottom, you hit apply, and it should email you a copy of the book. So once you get an email, you can download, you can open it up and take a look at it and see if you like it. But let me see if I can open it from here briefly. I think this is what the book looks like. Go back to the table of content. As you can see, the chapters 1 through 7, it's a pretty easy read. But the most important part was some of the concepts that we're talking about constantly in terms of velocity banking and infinite banking and opening a business. So those are some of the ideas that I played with in here to just allow individuals to say, look, just get started. You know, don't worry about so much, in that once you get started, this is going to be a learning curve for you. And understanding how to find money, how to get money, how to apply for it is super critical in our evolution. And so I wrote about some of those ideologies in here. So for example, the psychological trick can help you get out of debt forever. Sometimes it's our mindset that keeps us back and keeps us in debt. And what does it mean to pay yourself first? You know, so many times we don't pay ourselves first, and we don't have a saving and investment plan. I want to say that that is super critical to everything that we do in the investment space. Because if you don't have capital, which is the lifeblood of investing, it's going to be super difficult to do any acquisitions. And we can claim that the acquisitions are no money down or not at all, but all acquisitions at some point take capital, and we just need to be in a position to access capital. And I know most of the times I had mentioned that I'm finding capital in the credit union space, as well as through credit cards and through life insurance policies. And we're simply growing those out at a very fast rate. Most of the questions I get all the time is, where do I start? Where do I begin? And tonight, I'll show you where I began, right? And let me see if I can click on that link and get out of here. But I've started with acorns.com. Have any of you heard of this company before, by any chance?
I have.
Okay, good. Log in. This is the first page that pops up. This is my Acorn account. And I've just started this probably about maybe a year ago. Maybe about a year ago. Let me see if I can share a link. Email a link to myself, and then I will share that link with everybody in the group. Okay, good. Now, for those of you who aren't familiar with Acorn, every time I use my debit card, it rounds up to the nearest dollar. And over the years, this is what my account looks like with Acorn, from not doing anything but spending money on my debit card. So I have a Bank Smart account with about $1,200 in it. I have Invest in Your Future with $8,399.55. And I've set up a IRA account here, and it already has $5,741 in there. And then I added an account for the kids as well. So that's even growing nicely. So these are the accounts that I invest in. So I have Chewy, Nike, Apple, Walmart, Grubhub, Walmart, TurboTax. So it's a portfolio that I'm investing in. And how is that portfolio doing? Well, let's go with that portfolio. Total gains is 2.62 percentage points. Now that don't sound like much, and it's not, but what we have going on within this account is a dividend investment program that says that every time a dividend is distributed to this account, it actually impacts the account itself. So with that said, this account will constantly grow at a very decent rate. And it's not that I'm going to use the money over the next 20 to 30 years. So in the next 20 or 30 years, let's see where this account should be. Okay. With everything that we're saving, by the time I get 67 years of age, I should have accumulated $153,000, $153,858.72 by the time I'm 67 years old. Now, let's see what happens if I live until 80. Well, that's 400,000. Right? Now, that doesn't take into consideration that I might change and increase my investments to a little bit more than what they currently are now. So every year I revisit acorns.com and I readjust what my savings and investment plan is in here. So this is the place that I normally direct everybody to start at, even if you have no idea of what investing is like. Right now, the 2 percentage points, that's a whole different ball game altogether. And yeah, you might think that's low, but at the end of the day, that's going to grow and compound at a rate that's going to be unbelievable. So if you don't know, there again, how to start, this would be a good place to start.
And so Devon, do you invest $400 per month? Is that what I saw?
Yes, I invest. I've increased it to include $100 every week going to the IRA account. So that should give me a total savings of $5,200 every year to that account, which is the max account that I can max out on. And that will eventually, what's going to happen with that IRA account, I will end up using that or converting that to a self-directed IRA account, which means that will be used to invest in real estate. And I will then be able to invest that money tax-free for the rest of my life. And I can do that in groups. Right? So later on, I'll invest that as a self-directed IRA or convert that account to a self-directed IRA once it has gained some level of capital. And I'll put a link right here for the Acorns in the chat. If any of you want to sign up, use the link right there to sign up, and they will deposit money into your account and my account at the same time. So with that said, there's a number of things you can do with Acorns. As I said, I'm saving for the kids as well too. So even the kids, after a certain time frame, when they get 18, they will have a couple of few $1,000s in here. Now, this is only the starter group, meaning you need multiple diversifications within your own portfolio, right? And what we're constantly trying to build is this. Some of you may have seen me present this before, but I'm constantly going back here so that we can get a good idea of what this looks like. This is the ideal portfolio, which means that what I've shown you tonight falls in this category of passive investments. And I have Acorns right on here. But there again, each and every one of these categories, whether it's stock, bonds, Acorns, cash FX, FX trading, Charles Schwab, you got to have a drip policy to every last one of these things, right? So at the end of the day, this is just this quadrant that I'm talking about tonight. And for those who are coming just for the first time, this quadrant is my passive investment quadrant, which equates to 20% of my contributions per year for passive investments, right? This red section is 50% of my portfolio, which includes commercial properties, living assisted facilities, hotels, single family residence, and multifamily, right? And this purple part consists of 30% of me buying businesses. So I buy businesses through RTP funding, D&D, and I have a couple other corporations in Wyoming, as well as Nevada, that I can leverage for buying companies. And the infrastructure that we're building in this space is wrapped around three areas: health, wealth, and life, right? So anything in the health space, that's evidently part of the infrastructure in terms of how I build out the business cycle. And for those of you who are unaware, yes, I am in the middle of an acquisition for a radiology business in New York. It's an $8 million business, and we should have full control over it over the next couple of weeks. We're just waiting on the probate and the courts of New York to verify the administrators of the trust. And once they verify, the trust administrators will then turn over all the assets of that business to us. Now, it's a turnaround business. We anticipate that we should be in 8 million in revenue over the next 12 months. Right? So that's in this quadrant here. So this is exactly what we're building and exactly what we're talking about. And a lot of it has to do with a foundation within real estate. So all of these areas here, which is 50% of my portfolio, all of these have to be taken into consideration with the mindset that as we buy businesses, those businesses are going to have real estate, right? And as we do well in either the business space or the stock space or the passive space, we're going to send most of the monies between these areas over to our real estate side, right? And we do that a number of ways. We simply invest into a corporation that's either buying or selling anywhere in these quadrants, which means, and I know it sounds extremely complicated, but at the end of the day, networking is the key in order to get most of your transactions done. So deals come to me all the time in all these spaces, right? Primarily because I'm prospecting constantly. So I meet on average anywhere from about 20 to 30 new people every week talking about a deal, trying to fund the deal, sending them into the direction of where the proper funding is located. But at the same token, I'm asking the very same questions for myself as well when we approach these funding sources on behalf of the clients. And over the number of years, it took a minute to understand what this was like in terms of building a portfolio, because it took a life-changing experience to understand that once I get 60, I'm not going to have the same energy as I once had when I was 30. So my personal goal today is to retire in the next 4 years. 4 years. 4 years and I'm out, right? What does that mean? That means that wherever this portfolio is in the next 4 to 5 years, it's going to be my job simply to not work for anybody anymore and close out all of my active companies and then switch over to managing on the passive side of my investments and allow the investments to simply take care of me all through my retirement as I constantly grow the investments. So it doesn't mean that I'm going to quit and watch television for the rest of my life. It simply means that there's a conversion time frame of having the passive structure now support the lifestyle that you want. You know, and we talked a little about the Virgin Islands and how Tori was enjoying it last week. Well, imagine a life whereby you can go when you want to go and live how you want to live and don't have to worry about money, right? And pretty much that's what we're talking about here. So by me doing all of this activity, it's going to be real interesting over even the next 12 months as to the development of what is transpiring here. In order to live comfortably with just a husband and a wife, you don't need that much money, right? $300,000 a year is really a lot of money for anybody. So if and when we can amass a wealth of $3 million producing 10%, guess what? You live off $100,000 and you constantly allow $200,000 to increase your portfolio. Right now, 100,000 between two people, that's a lot of money, especially if you don't have any bills. Right? House is paid for, revenues are being generated passively and actively in your structures. This is what we're talking about. So even though we have talked about real estate over the last couple of weeks, I wanted you guys to understand exactly what that placement is like for the real estate, and where the mindset is of where I'm headed in terms of understanding the placement of that real estate. Right? I mean, I'll purchase real estate, but I won't spend one day managing that. That's all going to be outsourced. And I'm looking for the bigger deals, right? Do I need help with this portfolio? Of course I do. How I'm getting the help for growing this is talking to capitalization companies and partnering with them and sharing my vision and asking for anything greater than 50 million to 100 million to 200 million, depending on their capacity. So I do have a call tomorrow. Keep your fingers and toes crossed. If we pitch them at 7 o'clock tomorrow night, we can probably have an infusion of about 10 to 20 million dollars in one of these companies over the next 60 to 90 days. Now, what does that mean? That means that we shouldn't try to always deal with the smaller things. Obviously, we need to take care of some of our immediate needs, right? Before we even contemplate looking at asking for money. Because money is very afraid of you if you're in dire need of it. So when we meet financial houses, they're going to ask me, what is my financial disposition? Right? And not like clockwork. And they're always surprised that I have my financials ready to show them, my personal financials. So I show them my personal financials. Now, I don't have to at any given time, but I show them it anyhow. And I also show them my holdings. And I also show them my capital stack, right? So at the end of the day, they realize that they're partnering with someone that has taken the time to understand exactly what he has value and what he's bringing to the table. And a lot of times, either their criteria don't match my deal, or my deal doesn't match the philosophy of the capital companies that we're going after. And sometimes the partnership have different senses of opinions. But nevertheless, you're going to hear a lot of no's in this business. You're going to hear a lot of no's in this business primarily because 97% of the venture capital is black. Is white. So it's difficult to gauge who writes a check for who. But at the end of the day, we know that knocking on doors means that you have to have a diversified group in order to get anywhere in the United States. So with that said, I wanted to at least wrap my thoughts up with everybody here understanding what a portfolio is and how we're using it in order to do acquisitions, right? And we're working hard on everything possible. Now, the progress that we made from last week to now was really, really great. Last week, we showed the website. And we want our website to pretty much be interactive with how all of you gain access to the back offices and everything else like that. And we're still working that out. In the meantime, the other great news that I had, let me see if I can show it here. Let's get out of here. I've been trading Forex, which is also in the passive space, over the last 2 weeks. And so the Forex account, I gained 50% on the account last week. All right, so the account went from 700 to almost 1,000, right? Which is about 40% gain on the account. Now, the goal is that we will be master traders of this thing in a matter of, I would say, about 6 months, right? Obviously, this is after years of study. I didn't, even though I'm still considered a newbie Forex trader, it's an area that we want to amass a certain level of wealth. And one of the goals for us is that we can't work for some of this money on a 9-to-5 job, right? Even though that account only grew $300 over the last week, if I can do 40% compounded weekly, that means I can double this account in every 2.5 weeks, right? But once you do the math, if we can double every 2 to 3 weeks, the bank's not paying that. I don't see too many investments paying that, but the skill set, as it increases, we should see that number grow to 40, 50, to even 100%, right? So I've developed a certain strategy from start to finish in the Forex spaces. And we know that compounding is the key. So I have a compounding calculator on here, right, that I wanted to say, if we start out with $700 over 12 cycles of this thing with a gain of about 20%, we should have close to $4,900 in the account. Now this 12 cycle, even though it has months here, suppose we get to 12 cycle within a month. We could hit this number in a month time, starting with $700. So the YouTubers out there in the space of Forex and stuff, I mean, I've matched all of them with my strategies and their strategies. A lot of them are extremely good out there, yes, and some of them are even really, really great traders. But what I found out in this space is that you have to create a system unto yourself that works for you. All of those other systems out there aren't going to work for you unless you realize what's going on, not only in the market, but also what direction of the tape you need to be on. And a lot of times I use 4 different windows here in order to showcase that for me. The goal is, if you can do 40%, and here's the mindset, if you can do 40% per week on your account, imagine if your account is at $10,000. Imagine if your account is at $100,000. That's the goal. If and when we get to $100,000 account and we can do 50,000 on average in a week comfortably, now imagine that. And that is possible in the Forex. So I just wanted to bring that up, because at the end of the day, when you make the large gains within this account, I mean, no, it's going to take some time, but when you do make that type of capital in the Forex market? What do you do with it? Well, there again, it goes into your asset acquisition. So we make $40, 40K or 50K on our account. Guess what? I'm buying bigger and better properties, whether it's in the hotel space or I'm buying properties that actually are giving a positive cash flow. So this only accentuates the capital stack. And if we operate with proper discipline and an understanding of the direction of the trade that we want to be on, I have a funny feeling we can make that kind of money within these very same cycles. So the other area of passive investment that I wanted to talk about was cash FX. I'm going to get more into these things as we go along, primarily because this is strictly in the passive space. So, Cash FX is interesting, by the way, guys, primarily because of how they compound their money. Email confirmation. Email. Go and check. See junk. Oh, yes, I can do. Right. We've started an account with Cash FX maybe about 11 months ago or so, I believe. And we started with about 900 bucks. To date, let me see where this is. Finance. Okay. Balance. All right. So we started with about $1,000 in this account. Let me see if I can go back and see when we started. Since 22. We've started right here, February 2021. Right? It's been about a year, and we've started with about 900 bucks in the account, and over a year time, this has grown to $2,400 over 1 year. So technically speaking, they had double my money within a year. And these are all the deposits, weekly deposits that they've deposited into the account. So once this account gets maxed out, I'll upgrade it for additional credits. So I'm at about, on average, $65 per week in this account. This account can actually grow to $1 million if we just leave it here and compound it over the next 10 years. And that's exactly what I intend to do. Leave it here, grow this to $1 million, and then start withdrawing. The cost of that, it only costs me about $1,000. And I don't have to watch this. I don't have to manage it. I don't have to maintain it. And I can withdraw at any time, right? Now it takes them about 4 to 5 days, sometimes 6 to 7 days in order to complete a withdrawal. But at the end of the day, the money is growing very nicely right in here. And next week, what I'll do, I'll talk about maybe 3 or 4 other systems just like it. And I'll bring that to the table so that everyone can enjoy as well too. But we're finding great success in this space. We like it. And it's evidently one of these areas that if we had 10 of them and we started out with the same, $1,000, we're finding more opportunities in the space just like this, but with other companies that are more legitimate. And others in the space are making 6 and 7-digit figures on understanding these spaces. Now, it's our goal to be safe. If this thing goes dark, it doesn't change my lights from going off, right? So we want to be safe and start out with a very small amount in all these areas and have it grow into something. So we have a little time on our side. And there again, we have a funny feeling that Cash FX is one of those that want to play. Now, how they make their money, they're trading on the Forex market, and they're depositing weekly deposits into our account. So now, can I beat their record? Of course I could beat their record. They're only depositing $65 a week. And if I started out with 700 and I can grow that 40% every week, I'm anticipating if my stats remain correct, if I'm now at $1,000 and my ratio is anywhere from 30 to 40%, I'm looking and anticipating of making anywhere from $300 to $400 next week, right? So as that account grows and I build it slowly over time, I'm comparing it to all of these areas to whereby we then can generate passive investments to grow beyond our actual assets. Because I think even though in my portfolio, which we'll bring that up, talks about this space as 20%, this 20% would be producing more revenue than the other 80% over time, not today, right? This 20% over the next 8 to 10 years is going to produce more money than these areas. Why? Number one, at some point in time, these businesses are going to be bought and sold. And yeah, they would bring in a certain level of capital gains, but this sector will be growing constantly and will be growing constantly at a steady pace. So where to start? Start with having a savings plan for paying yourself first. And this is the major part of what it means in order to start investing. You can't be a lender in the space if you don't have any money. We're talking about a deal right now that is valued at maybe $150,000 as a bridge funding mechanism to a trucking business. And that trucking business has a $10 million contract from UPS, the United States government. So with that said, is there value there? Of course. So as we buy into that business, that's going to be a strictly passive business. We probably won't see a return on that for the next 4 or 5 years. But at the end of the day, we figured out a way to invest the bridge loan for them to get the actual monies that they truly need and to recoup our monies upon the funding sources for them being approved. So we get our money back within 30 to 45 days. But what does it give us? It gives us an interest in that business. So when they do sell, we will end up with an exchange of about 30% of that business, especially if they grow to 100 million. Right? They grow that business to 100 million and we own 30% of it, that's $30 million. And let's say we can sell out in the next 5 to 7 years. That's the goal of investing. And not too many people have that longevity or that mindset to wait. What did it cost us in order to get in? $0. Why? Because at the end of the day, we came in with the down payment, and would it be wise to deposit an initial investment of 10K into cash FX? No. Leave your money on the sideline. Start with very little money as you can and just watch it for a while and let it grow. So don't bring too much money to the table with any of these things, including the Forex account, right? I don't want anybody risking anything that's going to cause them any considerable pain. Right now, there are individuals who are at that level of $10,000 that, that won't affect their life bill. But a $10,000 hit at this particular juncture, that could be interesting, right? And I wouldn't want anyone to go through that sudden shock if, let's say, this thing closes up. Heaven forbid, but you're going to need to protect yourself and keep it moving forward. But there are other safer places for 10K, right? For example, there again, depending on what your portfolio is, you have to decide what your mix is, what is considered in that passive space, and you're going to have to try and build that, right? There's a lot of infrastructure that goes into building that very same portfolio that I talked about. The 10K, if you start out with 1,000 in cash FX, then there are about 3 or 4 other places that you can put the smaller allotments in that grow even considerably faster than cash FX. There are some companies out there that are growing at 1, 2, 3 percentage points per day. I'll talk about 3 of those companies next week. So I am going to invest in 3 of those companies next week, and we're going to rock it there. Now, to complete the cycle on the passive investment, Charles Schwab is another great financial institution that we recommend. And I do what's called ETF investing over there. And right. So we technically have $6,000 invested in the Vanguard S Standard and Poor exchange traded funds. And the gain on here is about $644, which is really cool. Right? But that's going to grow over time. Right? And this one is doing exceptionally well. We bought all along here, and we do have a dividend reinvestment policy. So now we're on the upcline. And I'm anticipating this thing to go to about $800, $900 over the next 12 months. So with that said, we would have just, I'm looking to double our account this year in the ETF space. And once we do that, that's going to be huge for exchange traded fund investing. And there again, there are others in the space that are doing just as good or even better than the Vanguard ETF market space. We can invest in a large blend. We can invest in the S&P 500 USD, and those are going out at 28, on average, 28.71% per year. Over 10 years, they have a compounding percentage of 16.55, which is really, really good. So there again, as we build the ETF portfolio out, there again, we want all of these things to go to $1 million, so that at some point we're dealing with Cash FX at $1 million, Charles Schwab at $1 million, and 10 others like it at $1 million. And there again, all of it is in the passive investment space. So that's it for our presentation tonight. I'll open it up to Q&A and see what everybody thinks and where they're at on their own portfolio, and open it up for discussions. So Catherine, what do you think?
I'm sorry.
Go ahead.
The whole presentation was good, and I thank you for running down all of that information. That's a lot to take in at once, but just listening and hearing your overview of everything, I'm liking what I hear.
Okay. So the goal is not to just only focus on real estate, but focus on building these other areas. And all of those other areas are going to help you along your journey. Now, we've made some inroad with contacts and everything else in each and every last one of those spaces. So there again, you're not alone, right? That's the whole reason why this club was made, to help.
Right. And I do a little bit of stock investing now through Ally.
Okay.
And
Yeah. How do you like it?
I like it so far. I've lost a lot of money with the market now, but that's okay. I mean, it's there to just kind of stay. I wasn't looking at pulling it out anytime soon anyway.
Okay.
But my I guess my concern is just how long do you wait before you start moving from real estate to developing your business? Did you do it all simultaneously? I mean, it's just a lot.
It is a lot, right? You're gonna find that you never have enough money, you never have enough time. You're gonna have to do it all simultaneously, unfortunately. We can then also talk about side hustles too, right? Meaning, let's say you're just starting a business. You're not going to have the revenues that are coming in order to support that business. So you actually have to bootleg your business in order to get it going, right? A friend is financing his business using DoorDash. Meaning he's out there hustling on DoorDash, making $1,000 a week and putting all of that in his business.
Yeah, and I heard you guys talked last week, and you talk about building a business, and then you talk about real estate. And I know you mentioned before using your business to fund real estate. What's the most advantageous way to go about the real estate? Do you just purchase the real estate, or do you develop the business and then use that business to build your real estate portfolio?
Okay. I would do it this way. I would go out and get a loan for my business. That's what I would do. And within that business, have a real estate component that includes the acquisition within that loan. Right? I would find a couple of partners who can write me a check to help get the business finance for the bridge loan component. I would find an aunt, an uncle. I would find the richest ones in my family for starters and see if they're willing to write a check to support my business. If you don't have that, then I would look for additional investors in the space, in the very same space that I'm in, and introduce them to my business idea, just to get me funded. Right now, their money is an equity infusion, but I mentioned it before that the best product in America right now is that SBA 7A program. What does that give you? That give you real estate. That give you a business to operate. That gives you inventory, equipment, working capital. You get that level of funding, technically speaking, let's say you go for $500,000. You're going to need $75,000 as a down payment. Where do you find $75,000? Those are your partners now that have to come up with the $75,000 in order to give you access to $500,000. That $500,000 is divided into working capital for your business, real estate, inventory, and equipment.
And so you say real estate in that sense, is that commercial real estate?
That would be commercial real estate, but part of the laws of the 7A means that you have to occupy 51% of the real estate. Well, that's good. You now can rent out 49%, which then starts you off with a cash flow within your business, and also the ability to start acquiring more real estate. Now, I would tell you that I would do a little bit more than just that, because I'm learning now, even in that space. Let's say I go for a 7A SBA note and I get it. I'm going to want to do more than that. As I mentioned before, all businesses need capital to survive. So I will start with the SBA, but I'm now looking for private equity infusion of money. I'm now looking at a bond placement for constantly raising capital. And why am I doing that? I'm doing that so that I can do mergers and acquisition in order to scale my business. Right? My business then becomes a machine because I'm eating up other businesses with cash flow. Right? Cash flow and real estate. And as I go through this process simultaneously, I'm going to realize that I need banking relationships. I'm going to need credit cards relationships on the business side. But as I'm growing the credit on the business side, I need to grow the credit on my personal side as well too. Right? So as you grow both business and personal, you'll eventually get to a point whereby you buy a home. That home now, once it has an equity value in it, you now have that part of your personal capital stack. So you're going to have to grow your capital stack the same time as you're growing your business. And that's why the credit union relationship is extremely important to your business life cycle. Because let's say you're raising bonds, you have a private equity partner. You also, on the personal side, will probably be awarded unsecured lines of credit to the tunes of hundreds of thousands of dollars. You leverage that credit now to get into the real estate game on your personal side. And that's how I got into real estate. That's how that roadmap is a little bit easier to follow for me personally than going out there, doing a deal by myself, and then I'm in that place doing the work by myself, being the general manager. I don't see me doing that, right? But at the end of the day, some of these bigger projects that I get a part of, I simply just need to sit back and watch a check come to me at the end of the month. But
Mhm.
I needed to understand all of the level of capitalization of that business on the business side and the personal side in order to wrap my head around how to negotiate the bigger deals. Because you got to understand that first before you start talking um, 10, 15, 20, $30 million deals.
Mhm.
Right? So the goal for real estate is take your time, partner up with others in the space. What be a copycat. There's
Mhm.
no there's no secrets for individuals who would take another over the shoulder so that they can watch and see what the deal looks like. So as we close out on some of these deals, I'll bring the tablet here so that you guys can look at and see exactly how that deal was structured legally and everything else like that. Because I think the more you know, the better it is for the entire group.
Mhm.
You know, and anyone can do these deals. It's just a matter of going out there and hustling, making sure all the components are put together, making sure we have the finances, making sure we have the legal team structured right, making sure that we have an operational plan in the aftermath, making sure we have a pitch deck. You know, all of those things count. So when you do get in front of money and they say, well, how much money you need? And you hit them, you knock them between the eyes with a figure that they can't comprehend, you know, then they're going to start backpedaling. And
Mhm.
those are partners that you need on the ticket. So let them backpedal and regroup in order to get to you so that you can have a beautiful relationship together. So that's my take on how to get into real estate. There are many paths now, mind you. That's just mine because I don't like all the hard work. And I built a building before, right? I did it on my own. I hired the general contractor. I sat on him and his team. You know, I kind of babysitted them through the process, made sure I got the permit, occupancy certificate, all the checks and balances. I made sure the construction was ideal. Um, that was a good experience. However, um, the exchange of time and labor going through that process, it's all right, but I could have been doing something better with my time. You know, so those who have the special skills in that area, I'll kind of hire and outsource that out. Because let's face it, if I'm doing 50% on Forex, where should most of my time be spent? It shouldn't be out there um, trying to understand how to put a place together when the cost of that will probably equate to, let's say, even if it's at $200 an hour with me being out there 40 hours a week, you know, you got to ask yourself, what are you giving up and what's the benefit of you being out there?
Mhm.
Right? So if that's $8,000 a week that I'm losing because I'm out there, is it really worth it? Wherein I could hire somebody for $8,000 a month to manage a project.
Right.
So that's my take. But there again, you know, there are a number of ways and a number of partnerships that you can have. I mean, we find a deal even on this show, and you bring a deal. You know, I'll put a capital stack together to fund the deal.
Mhm.
You know, so that's another way to get into real estate. You find the deal, we buy the deal. It's a win-win for everybody, and then you get an equity stake on the real estate side.
Yeah. And I guess you guys are like way ahead of me. I guess I'm renting right now and I have 2 months of a lease. And
Okay.
so I'm looking to buy my own real estate in terms of me living
Mhm.
there. Um,
Do it this way, right? If I'm just renting, I'm going to look for duplex or triplex.
mm-hmm.
I'm going to try acquire something in that area, live in one, and rent out the other two so they could pay for me to live on.
Yeah, and that's what I was running by you guys in the beginning, is house hacking and a multifamily property.
I would start there in that space. And there again, you could get some investors for that, right? You find a triplex, and so I think we had one of my students found the triplex this week, and he called me up and said, "Look, I found a triplex for $399,000." We know in order to get the funding for that, I need to bring $80,000 to the table. Why not I find 8 doctors with $10,000 a pop? Then that deal can be done. And right after this call, I'm talking to a doctor and asking them to be part of this group where we can have a capital stack of doctors immediately fund deals that you guys fund. And something like that might be worth it, because these people don't have the time of the day to look for deals, but they have capital.
And so how do you pay all those 8 doctors back?
Easy. After the property gets sold,
So
after the property gets sold, we split it. We split it with you.
okay.
So that's how they get paid back. And there's no guarantee that they're going to make that money back either. But we need to make certain that if they purchase a property for $400,000, they bring $80,000 to the ticket. We can at least sell that property for a minimum of $600,000 to $700,000 once we do all the renovations and everything else.
Oh, okay, I see what you're saying.
And that pays out everybody. And that keeps them coming back to you for more deals. So you don't have to have money in the space in order to do an acquisition. You just find individuals who are willing to write the check. Right? And that's how a lot of people start in real estate. And there's a lot of check writers on the sideline right now, because at the end of the day, finding deals are extremely tough in this market.
Right. I didn't want to hold up if anybody else had any questions, but I appreciate the feedback.
Anytime. Whitney. Go ahead, Tori, you're up.
You just want to know what we thought of the presentation and what we're currently doing.
Yep.
The presentation was informative. But so I have I'm working with Wealthfront. It's like a robo advisor, and so they invest. It's like they invest my money into those ETFs, and I think on the screen said VOO or something.
Yeah, that's the Vanguard group.
So they do that for me. So do I really? Is it? Does it make sense to still go to those outside?
If you have something going on, keep it, right? The idea is to have something that's compounding, right? And diversify in that space over time, right? So whether you use Charles Schwab as a broker or whomever you use as a broker, the idea is that you have a drip policy going into all of these other areas that will generate you money over time. So it doesn't matter who you use. You don't have to use who I use, right? As long as you have a vehicle that will help your passive portfolio out, then guess what? When it's time for you to retire, most people in the U.S. right now, they're getting to $1 million, and what they're saying to themselves is, "I quit." And what they're doing is living off 100,000 and trying to produce 20% per year from that $1 million, or living off of, some people take it to an extreme, they live off 4% of that $1 million, right? And constantly grow, right? I don't think I could do that extreme. I'll have to do at least 10%, right? Because that's just a little bit more comfortable for me in terms of travel and all that other good stuff. And if we're producing $200,000 a year from that 1 million, you should never be short on your money ever again in your entire life. So that's when people walk away from the game and say they're done. And it could be in anything. Man, the ETFs is one thing, dividend reinvestments. We'll show you the dividend reinvestments later on, but for the most part, as long as you have something versus nothing in this space, because compounding is the eighth wonder of the world, according to, is it Isaac Newton? I think he said compounding was the eighth wonder of the world. You know, and that's why I like trading as a way to accelerate that growth. So am I willing to spend the time in the trading room in order to trade? Why is that so important? Because it accelerates the account. You know, and there again, it's not going to take me long to grow that $700 account into 20,000. Right? I just have to be consistent at it and well disciplined to know what to do. We grow that into 20, 30, 40, $50,000 over a year time. Guess what?
But you can't trade on all the platforms though, right? Only the Cash FX.
Cash FX is one platform. I don't trade on that. Their traders trade my money on that, and then they produce a return and give me a check every Saturday. So I could go to sleep and like clockwork, they're going to make a deposit on Saturday.
So what were you referring to when you said that you trade? Which were there any of the, was that in reference to any of the platforms we covered, or just the Forex?
So the Forex, I do trading on my own with Forex, and let me bring that up.
And also with Cash FX, can you withdraw?
Yeah, you can.
Anytime?
Yep, you can withdraw anytime, but it takes them like 4 to 6 days to get you the funding back, right? So this is my trading platform that I use. I use LQDFX as my broker. I chose them because they are unregistered, but at the end of the day, you know, I wanted to get my trading wheels comfortable with understanding the arena that I'm playing with. So this has been highly creative for me in terms of understanding how to make money in the Forex spaces. We all need some accelerant to how we make money. And I've been studying this now for probably about a year. And I found it to be, if you understand the systems in play, even if you're losing money, you're still winning, because I realized that I have the ability to lock off my losing spreads and just simply sit back and wait for the accumulation process to occur. And once that happens, I have a hedging strategy, by the way, so I trade both sides of the tape. And it helps me because I can practically trade at any time and don't have to worry about if I'm wrong in my analysis or if I'm wrong in my decision. So it took me a little while to understand that. And with that being said, one day I'll show you how I operate the trading account, even from a losing standpoint, and still win at the end of the day. But for the most part, I started, of course, this account lost money whilst I was learning. I don't believe in demo trading. And yes, it's safe to demo trade, but you know, I don't want to demo trade for a year and not feel anything. because it's a different emotional experience once you're trading real money. So far, these are the windows that I look at. One day we'll get into it. I have a session on Thursdays where I trade between 4 a.m. and 6 a.m. I missed out on the last Thursday session because I end up falling asleep. But for the most part, I'll try to make that a consistent journey.
Okay. And are you, so with the SBA 7A loan, how hard, I mean, are you familiar with the process?
I'm very familiar with the process. I'm practically an expert in that space.
So do you just go to a qualified lender who's giving them out and apply?
No, what you do is for me, the easiest route these days is go to a packager, allow them to package my deal, create the business plan and submit it to their banks. They have over 50 banks in their reach. So I don't have to be shopping my deal around like I did with my very first deal. My first deal in the SBA 7A space was financed by Wells Fargo. And quite frankly, I'm closing on the building in the next 3-4 days, that very same building. So I'm selling out that commercial property for a really, really good deal for the next guy. And we'll get into the details of that later on as we go on this journey. But I had started with 3 units, made that a medical practice, and we're now selling 2 of those 3 units. And we might be keeping 1 for operationals for some of the acquisitions, which is huge in the space.
Okay, so you apply per deal, not per business plan, or?
Yeah.
Okay.
Yeah.
Can you send the information about the packager?
Yeah. Hold on, let me see what I got here. I do have some information on the SBA. Let me see if I can get to this email here. SBA 7A seminar. Sanjay, yeah, I sent it over to Sanjay. Okay. This was a presentation done by a friend of mine, Frank Scanavino, who is a packager, by the way. Let me send this over to you so that you can have some reading information about the SBA 7A and what it's like. I'm going to forward this over to you. Sorry, what's your email?
Info
at
travelsbyt.com.
Travel. Oh, there you are.
Yeah.
Okay. Let's see. In the way.
Because I was thinking if I apply for this, and then you said that you have to put down a down payment in order to secure the funding, right?
Yeah.
I was thinking my business credit cards could come into play for the down payment.
No, they're going to need what's called season money.
Season money?
They're going to need cash.
Oh. So season money is the same as cash.
Mm-hmm. Yep.
How will they know? How will they know it's that? How will they know?
They're going to ask you for 3 months bank statements. They're going to say, where's the cash coming from? And you're going to say credit card. They're going to say, no, it has to be seasoned, which means it has to be coming from your bank account or a partner's bank account, or it doesn't have to be yours. So as long as they see the money in the account whilst they're going through the approval process, that's part of you getting approved.
So that's where the doctors come in. They would basically deposit it early.
There you go.
Take 3 months to get seasoned. And then, okay.
They now become the season money.
I see, okay.
So that's why I say, don't worry too much about where the money, about the down payment. We know that's an extreme hurdle So don't get too caught up in, oh, I don't have the money, or, so I can't do that deal. You can always do a deal. It's just a matter of finding the right people with the very same interests as you and in that very same space. We're going to invite them to this platform. They've been asking me. I just haven't been sending them the Zoom. Right? Primarily because, I want everybody in this group to really get along well first, so that when we move to the next step together, we do it in one jump. Because once we see what deals look like and I bring them on the show, I'm going to ask them for money right on the show. Look, Dr. So-and-so, do you see the deal? Do you like the deal? Is it part of your criteria? How much are you willing to write a check for? All that's going to be part of the show.
Okay.
And I think it's doable. So whether it's your deal, whether it's Whitney's deal, whether it's Kavon deal, whether it's Catherine deal, whether it's Tory deal, doesn't matter. We'll find the capital in order to do the deal. Because that's what we do.
Okay, but then in 3 months, won't the deal probably be gone?
All depends, right? If the deal goes, then we'll simply search for another one. But normally, once you lock down a deal, sometimes it takes 3 months to close. In the initial contract, you're going to say we can close quickly, but it's going to be from now to 6 months, something along those lines. And they may turn around and say, okay, that's fine, but I'm going to need to still show the property. And that's where we got a little haggling to do. Well, no, we don't want you to show the property. Right? And they'll say, well, what if you guys don't do the deal? Well, then we change the conversation into something else, as to having a derivative or some monies held within escrow if we don't do the deal, that kind of thing. So that's an option there too. And then we can haggle what that amount is. Okay, let's put $500 down. If we don't do the deal within the 60-day time frame, you get the $500, something along those lines. So that's what we have great lawyers for. Let them carve out the language of how you want to negotiate and put it into a format that makes sense.
That's all for me.
Okay, anybody else? All right. Well,
Yes. Hi, everyone.
hey, we say
Yes, I'm fine, man.
good, good.
About your presentation, I would say it looks like solid investments into diversification.
Yeah.
And then ultimately what we're looking at and what you always talk about, which is multiple streams of income.
Yeah.
So I agree with it. But I will also, about the SBA 7, I want to mention that I know a few people who they got the SBA loan, but they didn't pay any down payment, right? And what I was told is that within what the government stipulates is that it's no money down, but then the banks, they offer or they request a down payment based on uncertainty, looking at the exposure to risk, and then uncertainty with the individual, to really pull off what they say that they would. And I think that having a management team, an experienced management team, around you as you go into a deal like that, would increase your chances of getting through without, having a down payment.
Agreed. Now, how we do the no down payment within the SBA, we wrap it up into a discount on the seller side of the real estate. All right. So there are creative ways of doing a no down money transaction with the SBA 7(a) program. And that's why I like them too. because we do
Okay.
use that setup.
Mm.
And it's a beautiful thing. So I agree 100% with you, Kavan. But you got to be savvy about your deal and how you structure it. And as long as the seller is willing to give you a discount, you ask them to increase the sale price of the real estate. You're already getting working capital. So at the very same closing table, when you present, let's say your deal is $1 million and your real estate is 400,000, but you ask the seller to increase his price to, let's say, 550, and that you get the difference back at the closing, they seldomly say no. So when you present either 100 or 150K, let's say you do have a business and they're asking 10% down. So when you present 100K to the bank for a loan of $1 million, they got to write a check for 550 for the real estate component. And at the very same table, the seller have to write you a check for about 150. So
Okay.
that's you get a couple of different breaks there, but at the end of the day, that's how some of those deals are structured. From an accounting standpoint, it creates an advantage for the depreciation and capitalization of the asset. And there you simply move forward underneath that regards, and it helps.
Mm. Yeah, outside of that, I'm still eager to learn more about the wholesaling, knowing that the key aspect of it is to pinpoint the property that matches the criteria, that sweet spot that the investor is looking for, finding properties constantly and repetitively that match that.
Yeah, we're still unboxing the private equity software that I showcased last week. We should have a better idea or handle on it by next week. My team is working on, there again, clicking all the switches in the background so that, and we're trying to figure out how do we give you guys access to that software so that you guys can do the searches and everything else with that software without any additional fees attached to this thing. So we're trying to figure that component out.
Okay. Yeah, no, it's no rush at all. I also did some research on my own because I really think that it's interesting.
Yeah.
Really interesting.
Okay. All right. I'm with you all the way. What I like about it is that you can do it from anywhere in the world, right? So
yes, primarily.
Yeah.
Yes.
So you could create an army as long as you have a link right here in the US who's willing to do the acquisition. It's a no-brainer.
Yes, I think that flexibility, it really provides the ability to work, meaning be productive, I would say, in a manner that is self-empowering because you're doing it from home or you're doing it from anywhere where you are your motivation, in getting it done. And in some cases, for me, I would say, honestly, it's about giving myself commands. Sometimes I don't feel like it, but then knowing that it's a process that I have to keep myself applied to.
Yeah, it's certainly a process, let me tell you. It's certainly a process. All right. If there's
So that's it with me.
If there's nothing else, I'm going to close up the shop and then we will link back next week. And there again, everyone can enjoy the free book that the link that you have.
Thank you, Devon.
Thank you.
Anytime, man.
Yes, thanks again.
All right, thanks, Kavon, and everybody else. Thanks for coming out.